Looking at the Markets with David Moadel. Welcome to Looking at the Markets with David Moadel. Today we're going to look at the opening range breakout day trading strategy. And this is not a perfect strategy. It's not a perfect indicator. It does not work 100% of the time. But if you're looking for a good, solid, usable strategy that's really simple, you can certainly use this. Okay, so let's take a look at some examples so I can show you. This is ticker UNH, which is United Healthcare. And let's define what the opening range means right now. It is the first half hour of the trading day. Alright, so this is the beginning of the trading day, and this, I know it says 10, but that does not mean 10 o'clock, it means March 10. Okay, so it's actually the opening of the day, which is 9:30 a.m. Eastern Time. So this stuff over here, this does not count because this is the end of the previous trading day. So the opening of the, I'm going to consider the first half hour. Alright, so it's from, and these are this is the 5-minute candlestick chart. Alright, so each candlestick represents 5 minutes of price action. And so if this is 9:30 a.m. and this is 10:45, then the first half hour of the trading day would be from here to about here. So that would be the opening, what I would consider the opening, or the first half hour of the day. And the opening range would be how high did it go and how low did it go, the high and the low of that first half hour. So if the low of that first half hour, remember this stuff doesn't count, it's from here to here, so this would be the low and this would be the high of that first half hour. Alright, so that would be the opening range. And so if the opening range is from here to here, then you're going to look, so you wait for the first half hour, you just wait for that, and then you mark the low and the high of that opening range. And then you look for a breakout either to the upside or to the downside, meaning you wait for the price action to either break with conviction, okay, meaning break, strongly above the high or strongly below the low of the opening range, the first half hour's opening range. So after the first half hour, the range was established, and then it started to go down, but did it break below the opening range? No, it got close, but then, that was kind of like a head fake, because then it went back up, and it broke very convincingly above the high of the opening half hour range. It broke above it convincingly, and if you bought, then you would have done nicely for the rest of the day. You would have done very well. Okay, and you probably want to use a tight stop loss here, okay, because it could turn around, and if you're a day trader, I hope you're using some sort of method to hedge your trades, such as a good stop loss, okay. But if you had bought the opening range breakout, you would have done very well. Let's look at another one where it broke above the opening range. This is ULTA. And there's a big opening range here, okay. Again, this says 10, but that's March 10th. It's really 9:30 a.m., the opening of the day. And the opening range was way down here to about, let's say, way up, actually about here was the opening range. So from down here to up here, and it did not break below the opening range, the first half hour of the day, not even close. It immediately broke above it, and if you had bought that, it went sideways for a while, chopped around, and then went up. Okay, so if you had had a stop loss a little bit below that, it would not have you would not have been stopped out. It just would have chopped around, but if you had stayed in there, you would have done quite well. And so those are two examples of a convincing breakout above the opening half hour range, where you just hold on to it and let it go up, because that's where the momentum is. Now it can also break below the opening range of the first half hour. Okay, so this is SPY, and it gapped up here. The first half hour was from here to here, thereabouts. So if the range was from the low here to the high here, okay, and then immediately started to go down. It never went up above the opening range, but certainly broke with conviction below. Look at all those red candles in a row. And so, and it went sideways, chopped around. If you had had your stop loss around here, it would not have, you would not have been stopped out, and it went down, down, and down. Okay, and you have to take your profits, by the way. Otherwise, you can see how it can turn around and go against you. Okay, but if you had taken your profits, if you had had your profit target, you would have done well with this. All right, because the momentum was to the downside. Here's another example of the momentum being to the downside. The opening range for AA, which is Alcoa, would be, let's say, from here to about here, okay, and then it broke with absolute conviction below that very quickly. And by the way, the sooner it does it, the better. The sooner it breaks with conviction either above or below the opening half-hour range, the better. If it takes too long, if the trading day is almost over, then it's not as, there's not as much conviction there. It's also good to look at the volume. If there's volume behind the breakout to the upside or downside, that's a good sign as well. Okay, but mainly I'm looking at the price action. How strongly is it going above or below? This is very strong. Look at those big red candles, and look how many red candles in a row there are. So it went below that opening range, and you know, you would have had a nice profit there. Okay, and you want to take your profits, because let's say it went down here, you took your profits, it could have gone back up very easily. It didn't, but yeah, it's important to take your profits. Have a profit target with every trade. Okay, here's USO, which represents oil, and if this is the okay, gap down, and then from, let's say, here to about here, if this is the high and this is the low of the opening range, all right, it went down below it, and if you had bought that breakout, or I should say breakdown to the downside below the opening range and held on, you could have had a stop loss around here, would not have been stopped out, and you could have profited quite well. Alright, so these are some examples of a very simple day trading strategy involving the opening range. If you found this to be helpful, please give this video a thumbs up on YouTube, leave comments, and please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. Alright, and if you have questions or want to put together a trading plan for your stocks or options trading or investing, you can email me at any time. My email address is davidmoadel@gmail.com. Thank you so much for watching and listening, and I'll talk to you again soon.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.